Indian real estate market has been an area of attraction for NRIs since time unknown, as it should, because investment in properties are extremely profitable in India, and that further combines with the emotional attachment to their country. Thus, NRIs rarely miss an opportunity to own a real estate property. So today, in this video by RealtyNXT, we will share the details about what NRIs need to know about investing in real estate in India. If you're looking for statistical reports that can prove the statement, have a look at the report from Knight Frank Active Capital. According to this report, Indian real estate has witnessed a massive demand by the domestic population as well as the NRIs. The report further concludes that the foreign investments in Indian realty rocketed from $3.2 billion during 2011 to 2013 to $7.6 billion during 2014 to 2016, recording a massive growth of 137%. It was also discovered that nearly 63% NRIs choose to invest in real estate rather than any other investments in India, by data from ANROC's Consumer Sentiment Survey for H1 2019. According to Reserve Bank of India data, half of income earned by Indian citizens is used for family upkeep, followed by bank deposits, although a significant portion is also invested in real estate. According to the report by 360 Realtors, NRI investments in Indian real estate have doubled from $5 billion in 2014 to $10.2 billion in 2018. The major reason for the growing interest of NRIs in the Indian realty market is the new government policies favoring NRI investments. Government wants more foreign investments in real estate, and so they are encouraging it through ease of policies. Due to this, India has witnessed investments worth $13.3 billion by NRIs in its real estate market. During fiscal year 2021, which is against the earlier estimates of $13.1 billion according to a report by 360 Realtors. We can see that the ratio of investment volume has seen a growth of 6.4% compared to the previous fiscal year despite the slow market during the pandemic. So the main question arises, did the pandemic affect the NRI investments? During the coronavirus outbreak in 2020, the figure for NRI investments came down by 35%. However, the situation improved in the second quarter due to attractive payment plans and huge discounts offered by real estate developers. Another reason for the surge in the second quarter was due to the growing belief that real estate properties are the safest option for investments in the post-lockdown world. Gold and share markets have become too uncertain to be a safe investment option for some people. The use of technology by real estate developers to promote virtual tours of properties and online payment method also led to the overall increase. A regression analysis report further estimates that investments will grow to $14.9 billion in fiscal year of 2022, witnessing a growth of 12%. Investments by NRIs are nowhere near slowing down. But when we talk about technological development in real estate, what do we really mean? Real estate was surely a little late to adopt technological trends from other industries, but now after the lockdown and social distancing norms, it's difficult to do physical visits on the property. So here are the technologies which helped NRIs to invest in real estate. At number 1, we have virtual tours. It allows people sitting in any location to inspect a property and do the paperwork without the physical involvement. At number 2, we have building information modeling, also known as BIM. BIM allows builders to showcase the upcoming projects to interested home buyers by compiling a 3D model of the building or the project. It helps potential buyers or investors take a closer look at the insights, and they feel more comfortable because they are taking an informed decision. At number 3, we have smart homes and eco-friendly features. A cherry on top technological factor which has raised a sudden interest of NRIs is smart homes and eco-friendly features. It allows the user to control everything in a home with just a click. This has created a security cushioning amidst the people who are not in India and still want to invest in residential property. Another thing that is playing a major role as a catalyst for NRIs to invest in India is RERA rules. The Real Estate Regulatory Authority was passed by Indian Parliament in 2016 to protect the interested investors or buyers and create transparency among them and builders or developers while increasing the accountability. According to RERA, a builder needs to register before promoting or advertising any of the projects. Along with this, there are regular updates about ongoing projects, and developers can't divert funds from unannounced projects and are answerable for all the glitches, and hence RERA has emerged as a great tool for home buyers and NRIs. The most important aspect of RERA is that it has created a uniform body in all states and union territories like SEBI for stock markets, which in turn has standardized all the purchase of properties, be it apartments, homes, etc. So the main question arises, what should you know before investing? Looking at the above trend and future estimates, it is obvious that real estate investments in India by NRIs will continue to increase. So let's have a look at some points which NRIs need to consider before investing. At number 1, availability of proper documents. Non-residential Indians planning to buy real estate properties in India can invest in only commercial and residential properties. For this, the list of documents that NRI might need is thankfully not long. All they will need is passport, address proof, a permanent account number, and a recent photograph of them looking at a property they want to invest in. At number 2, we have FEMA Rules. The Foreign Exchange Management Act 1999 by the Reserve Bank of India has made it pretty easy for NRIs to make real estate investments in India. According to the guidelines of this act, any NRI or PIO person of Indian origin is eligible to own a property in India other than agricultural land, plantation property, or a farmhouse. However, there are certain exceptions to the act that NRIs must consider before making the investment. At number 3, we have home loans. With the government promoting foreign investments in the real estate market in India, they have established easy access to home loans for NRIs. If you are an NRI who lacks ready funds, you are still eligible to apply for a home loan. Banks and housing finance institutes that are registered with the National Housing Bank are now permitted by the RBI to provide home loans to NRIs who want to buy a residential property in India, considering all monetary transactions have to be done in Indian currency. Interest rates on home loans are as low as 6.5%, while an NRI can also avail a loan for up to 80% of the total property value. However, an important thing that NRI need to remember is that home loan will not be credited directly to the bank account of a NRI. Rather, it will be disbursed to the seller's or the developer's bank account directly, whereas the loan can be repaid through the funds from NRO, non-residential ordinary, or NRE, non-residential external account, or FCNR, fixed deposit foreign currency account deposit of the NRI. It's a smart choice to use NRI account while applying for a loan because this will allow the investor to repatriate the capital invested in the property when you sell it off. At number 4, we have tax benefits. When it comes to tax benefits, an NRI will enjoy the same benefit as that of a resident Indian. Along with that, an NRI will have to pay a rate of 1% for withholding tax deduction at source if they are buying a property that costs more than 50 lakh Indian rupees. A vacant property that is declared as self-occupied will not be charged on wealth tax for the NRI. Another option to avoid wealth tax is to rent the property for at least 300 days per year. However, this rule only applies for the first property belonging to a specific NRI. For subsequent vacant properties, they are expected to pay a tax at the rate of 1% of value, that is net of outstanding loans, which is more than 30 lakhs. At number 5, we have power of attorney. Since the NRI may not physically be present in India despite owning a property, they can choose a relative, colleague, or even a close friend to carry out all the legal transactions. This can be done using a power of attorney, which is basically a document that allows a person to act on behalf of another person. Thus, an NRI investing in the Indian real estate market must ensure that he delegates the power of attorney to a suitable person and registers the document to avoid any frauds and disputes in the future. At number 6, we have choose the right developer. It is of foremost importance for an NRI to carry out his own personal research and select a good developer. Choose a developer who has a good reputation in not only the regional real estate industry but on a wider scale. An NRI should look for certificates and awards and should also inquire about the developer through local residents. At number 7, investing in commercial properties. For an NRI investing in Indian properties only for the sake of good returns, it is best to invest in commercial properties because of consistent returns and good capital appreciation. Now that there is an outline drawn on what you need to keep in mind while investing as an NRI, the next question that arises in the mind is where NRIs and PIOs can invest. The Reserve Bank of India has granted wide authority to NRIs to acquire any residential or commercial property in India via circular, with one restriction of them not being able to own any agricultural land or plantation property in India. The investor is not needed to seek special authorization for RBI, nor is he obliged to submit any letter or notification to the RBI in this respect. Income tax regulations also let an NRI to possess as many residential or commercial properties as he or she desires, also having the right to apply for an arbitrary number of home loans too. This falls under the current journal permits. If they wish someone to do the needful transactions on their behalf, they have the authority to give power of attorney to that individual. Now that it's clear what you should keep in mind while investing in real estate as an NRI, along with where you can invest, let's take a look where the tax benefits you can get while investing in the real estate. An NRI must pay the same taxes as any other Indian resident when purchasing a property in India, including stamp duty, registration fees, post-purchase yearly property taxes, and even GST in the event of an under-construction home. Proceeds gained from the sale of an immovable property can be repatriated after a TDS deduction of between 20% if the property is being sold after 2 years of purchase, that is long-term capital gains, and 30% for short-term capital gains. Section 54 Exemption. Section 54 exemption applies to long-term capital gains. The property can be self-occupied or let out. You are only required to invest the amount of capital gains, not the whole selling receipt, and your exemption is limited only to the whole capital gain from the transaction. Section 54 allows you a time frame of a year before the sale or 2 years after the sale on a ready possession property or a construction property which will be ready for possession under 3 years from the date of sale. Section 54 Exemption. Section 54 exemption applies to long-term capital gains for property assets and other than residential house properties. To obtain this exemption, the NRI must either acquire one home property within 1 year before the date of transfer or construct one house property within 3 years from the date of transfer of the capital asset. This new house property must be located in India and cannot be sold within 3 years of acquisition or construction. One more thing to be noted here, the NRI should not possess more than one home property apart from the new house, nor should the NRI buy or build another residential house during the next 2 years. Section 54 EC exemption. If you can avoid paying taxes on long-term capital gains by investing in specific bonds, for this aim, bonds issued by the National Highway Authority of India (NHAI) or the Rural Electrification Corporation have been designated. These are redeemable after 5 years, formerly 3 years, and must not be sold before 5 years, previously 3 years, from the date of sale of the house property. It is important to note that you cannot deduct this investment under any other circumstances. You have 6-month window in which to invest in these bonds, but in order to claim this exemption, you must invest before the return filing deadline. Don't you think the real estate market in India has never been profitable for NRIs than it is today? With the establishment of Real Estate Regulatory Authority known as RERA, more transparency and accountability has emerged in the market. Investing in the Indian real estate market at this time will fetch NRIs a huge rate of return with less capital, and this has been the major point of attraction. The digital service offered by real estate developers have also attracted many foreign investors. Digital launches, 3D viewing of the properties, augmented and virtual reality based design concepts, virtual property shows, and online transactions have given an opportunity to the NRIs to view and learn more about the number of options and types of properties available. More updates, trends, and insights by RealtyNXT. Do not forget to share, like, and subscribe RealtyNXT.